Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be Mango Research. Sean and I will never, ever contact you for investment opportunities or anything of that sort. To get in touch with the real Mango team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it Mango.
Good morning, seedlings. So this is going to be a quick video where I explain my mindset with a trade that I just took in this region over here, as well as talk about a trade that I've been building from this region over here, right? So what I'm doing now is essentially looking to combine these two trades if this trade goes well, right? However, if this trade goes bad, I'll be looking to cut both trades at the same time. So this is going to be a really interesting video where we'll be combining multiple concepts from the entire seed program. Not all of the concepts, of course, because I do want to keep the video short, but nonetheless, we'll be going over a few things. So first things first, let's talk about a little backstory, right? Or rather, a little context on the trade that we already took like a few days ago around this region. As you guys know, you guys have been following Bitcoin. Everybody's been following Bitcoin. We had the move all the way up to around 60,000, dropped all the way down to around 40,000. And I've been buying spot at around 42, 43, blah, blah, blah. As you guys know, when I'm playing with leverage, I do not try to catch a falling knife. However, I did start buying leverage as well at around this candle right over here. In fact, right on the close of this candle, I did start building my leverage position, and I started building it with some conviction. And essentially, the first thing that we noticed, right, was that one, we were on major support on the higher time frames. And in yesterday's daily video, we did talk about my macro mindset as to what I was looking for, right, in terms of the monthly close, the daily close, the 12-hour close. But there was something interesting going on over here, and I'm pretty sure some of you who have been watching the oscillator module caught it, right? It was staring us right in the face, and we did have bullish divergence right over here, okay, between this area over here and these areas right over here. We had price making lower lows and the oscillator making higher lows. And where do we get triggered? If you guys have been paying attention to the oscillator module, right on this candle, right? As soon as we close this candle, we knew that, hey, the bullish divergence is triggered. Now you combine that with everything that we were looking at on our macro analysis as well, in terms of the monthly, again, the daily, the 12-hour, our thesis on how it was likely going to be this candle close over here, right? This all of that weekend action leading into that monthly close was likely going to end up being a bear trap, right? We did see that line up with our 4-hour oscillators as well, essentially the bullish divergence triggering. So a lot was lining up with, hey, you know what, it's a good time to not only have a nice spot position built up, but also start looking to build that leverage trade position as well. So that's when we start building that longer term trade, right? So this trade was going to be on the higher time frames, and I'm going to be looking to be holding this on a proper trend reversal trade, looking perhaps for even above 60,000, right? All right, so let's go ahead and get started. So remember, we do have two positions essentially that are being combined into one position. The first position is what we built from over here, hedged over here. Now we are unhedging that position over here, right? And we also added to that trade essentially, right? It's a brand new trade. But because if we are wrong on this trade, I'm essentially going to be cutting this trade as well, right? The trade that we hedged over here and unhedged over here, it's going to be essentially a combined trade, okay? So let's go ahead and now talk about why did I decide to pick this spot over here to hedge my position. Well, right off the bat, some of you with a keen eye are probably noticing this bearish divergence over here. But remember, okay, you don't know whether this bearish divergence at the time was actually legit or not. It could have literally been nothing, right? Remember, we always talk about never trading bearish divergence in isolation. However, this time around, we had this weakness in the oscillator going into higher time frame major resistance. We had the dynamic coming in right over here. So what do? Well, depending on your position over here, depending on the conviction in your position over here, you can hedge into the first lower high after we lose a daily uptrend. So remember, over here we lost the daily uptrend, right? We had an initial uptrend, really strong uptrend, lost that uptrend. Now what I like to do for is looking to either sell into the lower high or at least hedge my position. Okay, hedge my position. Now that you don't have to do this, guys. You can keep it simple. You can keep it simple and be even more mango than I am being, and not get too overcomplicated with this. Just look for a trend reversal if that's your thesis. But part of my thesis is that I'm not convinced that we are going to get a trend reversal from over here. We could really just simply roll over from over here and come and test these lows over here at around 44,800, right? We could very well do that. That's part of my thesis, which is why I look to hedge a majority of my position on this potential lower high on the daily time frame. However, at the same time, I'm theorizing that there's a chance that we may actually put in a higher low at this region somewhere and then continue towards the upside. So where am I getting that from? Well, let's go back on over to the lower time frame. And right over here, you guys can see that on the Mango dynamic, the 4-hour downtrend, okay, ever since we lost the daily uptrend, right, we start putting in a very clean downtrend on the 4-hour. Every single candle has been coming, smacking against the 4-hour dynamic, rejecting and continuing the downtrend. Again, right over here, smacked against it, rejected, continued the downtrend. Right up until where? Until this region over here, right? Remember, we had already started building our position from around here, right? We put in that bullish divergence on the lower time frame, right, coming in on the higher time frame support levels. That's what allowed us to get in a little bit earlier. But now we're seeing an indication of the lower time frame trend beginning to switch. So remember, guys, we talked about this in the trend analysis module. That's how you start getting your trend reversals cascade onto the higher time frames, right? First the 4-hour trend will change, then the 12-hour trend will change, then the daily trend will change, and now you start seeing everything come into confluence. Remember, because the weekly trend is still towards the upside. Now you'll have all your trends going towards the upside, and that's when you're on a very strong trade. But we still don't have that confirmation on the daily yet. You can, however, start using the 4-hour trend to your advantage to build a position and look for that daily to reverse as well. You're not going to get the daily reversing immediately, right? But it may just reverse, or it may actually come in and smack that 4-hour trend, which is beginning to start trending towards the upside, may smack it back down. Now that's the question. Are we going to be wrong over here? Is this 4-hour trend going to actually get smacked back down, right? Or will the 4-hour trend be strong enough to convert that daily trend into an uptrend, right? So you guys already know in the C chart that I did buy the retest of this, right? This is where I added to my position as well, to the position that we built in this region. I added to my position over here. Now this time I didn't add over here. I didn't add on the dynamic. I instead added on the cloud. Okay, add on a cloud, and this sits in line with the strategy we posted under the module, right? The trading strategies module. It's called trading the wink. Okay, trading the wink. Go ahead and watch that video, guys. It's a 20-minute long video on that strategy, and it's one of my favorite freaking strategies, which is why I posted it for you guys out there. And the Mango dynamic sits really well in line with that strategy, whether it be the 4-hour, the daily, or the 2-day time frame. You can use it. Okay, use it along with the risk management tool sheet and the risk management strategy module, and you can actually pull off some really good trades while keeping very safe. And this trade over here that I added, now I wanted to be safe, right? I want to be a little bit more cautious. Why? Because I'm also unhedging from this region. So I not only added to my position, guys, right? Not only added a new trade, but I also unhedged my position from over here. So now my open risk has increased, right, on Bitcoin. If I'm wrong about Bitcoin, my risk has increased. So I wanted to trade the wink, right? So go ahead and watch that section. It's going to be really beneficial for you guys to understand why I was doing this over here too. All right, so now we're going to talk about a couple more things that I was looking at that lined up with my thesis that we might be putting in a higher low over here on the 4-hour time frame. And remember, that's essentially our thesis, right? We're looking for the 4-hour uptrend to continue and reverse the 12-hour trend and the daily into uptrends as well. Okay, so essentially what we're doing is hunting for a higher low on the 4-hour time frame. And I was looking at the Ichimoku over here. I posted screenshots of the Ichimoku this morning on the Seed private chat, and I'm sure a few of you were looking at this as well, right? And this got really interesting for us as soon as we got this TK cross over here. Let me zoom in for you guys, right? You guys can see the Tenkin cross bullish on the Kijun right over there. Now it's not the perfect setup, right? We would like to see this cross above the cloud. We're getting it within the cloud. That being said, with the overall context of things, I still do like this, because remember, this is just adding probability and a booster to our thesis from the higher time frames on the weekly and the 4-day, etc., especially the 3-day looking fantastic. That being said, we are looking for the 4-hour higher low over here, right, to reverse onto the mid time frames. So that's the focus of what we're looking for right now, and essentially we hunted for this higher low. Now honestly guys, you could have literally just bought the TK cross. That's completely valid too, but we wanted a little bit more juice on our trade. We wanted a safer trade as well, right? And that's completely fine as well. Buying the TK cross is completely fine, but we pulled off a better buy on the bottom of the mango cloud right over there. Now there's risk to that too, right? Maybe I would not have got this buy over here, right? Maybe I would not have got 48,550-ish, but that's the trade-off that you do take when you're trying to get a juicier trade. And in that case, guys, if I did not get this buy over here, all I would have done is waited for the 4-hour candle close and then taken the same trade. But things worked out this time and we did get the buy. But moving back on over to the Ichimoku setup over here, you guys can see that things are lining up with the Tenkin and the Kijun as well. So we're not only going to, if we get the candle close that we are looking for above the dynamic, we'll also be getting that 4-hour candle close above the Tenkin and the Kijun. And guys, this is essentially the bears testing that bull cross, because this is a bull cross and the bears are coming in to test it. If we close above, it is more likely that we have the Tenkin and the Kijun keep their momentum towards the upside. I'm pretty sure if we turn on the 21 EMA, we're right over there too. Yep, yeah, we do have the 21 EMA. So this test over here would have been a good buy as well. Again, we did buy the bottom of the mango dynamic cloud because we did have that edge going for us, but you don't need it, right? Let's say you don't have the mango cloud. Trading this is completely fine. Okay, trading the 21 EMA, Tenkin and the Kijun cross is completely fine. Alright, and there's one last thing I do want to talk about before we wrap up the video. There are a few other things too that I'm looking at, but I don't want this video to be too long. And right over here, you guys are seeing that the stochastics have bounced off the 20 zone right over here, cross bullish yet again, and beginning to open up towards the upside. Now, we don't have confirmation on this just yet, but I do like the look of this, right? It adds further probability that the momentum is now swinging towards the upside after having a big downswing, right? We stayed in this bullish zone right over here in this bullish territory above the 75 zone for a very long time, lost the daily uptrend and started swinging towards the downside, now crossing at the critical region towards the upside. So I really like that. Okay, so again, that's just another booster going in our favor. We need to see confirmation of this, of course, on tomorrow's daily candle close. And now let's go ahead and wrap up by talking about where are we going to be wrong about this trade. And this is where it's really simple, and I like to keep my invalidation points really simple and very objective, right? If we close a 4-hour candle underneath the mango dynamic, and specifically guys, the next 4-hour candle, right? If we close the next 4-hour candle underneath this dynamic over here, I will be getting out of the trade, the brand new trade that we added right over here, and I will be re-hedging our hedge from over here, right? Our unhedge from this region, I'll be re-hedging that, and then I'll be looking towards the higher time frames again to see whether or not the daily is going to have that rather the daily downtrend. Okay, remember guys, by the way, we do have even on the daily, we do have support right over here on the mango blue dot, right, on the dynamics blue dot. We do have support over there. Now again, remember, I'm not convinced that Bitcoin actually reverses from over here, right? Not yet at least. We could very well come down and test the bottom of the cloud over here. Okay, that being said, I am not trading my gut feeling over here. Like, I don't have a gut feeling, I don't have a strong feeling about this. Okay, just want to be very clear on that. The point over here that I'm trying to make is that I'm trading a good setup there. Like, I'm just trading a good setup, right? I'm not convinced that we go up, but the probability is what I'm trading. Okay, I might be wrong on this. I may lose this trade, and I'll gladly take that loss, because I know that looking back at the trade, I'd take the trade again, right? Because that's what matters. You don't have to win every single trade. You just have to take every good trade set up and not let your emotions come in the way. So that's essentially the gist of it, guys. I hope you guys enjoyed this video. I hope you guys were able to learn something at least from this video. My name is Sean Dexter. I will see you guys in the next one. Bye.